Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the mini S&P. I'm so sorry. This is the Dow we're looking at. That's our Venerable Swing System 5.0. As you can see, gave up quite a bit of profit on this latest move. That was a beautiful trade right there, but gave up quite a bit of profit on this latest move. As you can see, right around 13,000 down to 12.5, so 500 points. But nevertheless, we're looking for the intraday analysis of the E-mini S&P 500 futures contract. Front month, 1345.50 is the last print on this Thursday. Looking at a pretty impressive day. It was a big day, big down day yesterday, as you can see, and it was full all-out bearish on our indicators. These are our proprietary indicators, what we refer to as our intraday dynamics, kind of how we use to gauge the market where it's likely to go. And what was interesting is we had a full-on bear trap. These are just beautiful setups. The bear traps, the bull traps. We had this exhaustion type gap to the downside. It's really particularly noticeable in the smaller cap indices, but a little bit of a gap, but nice little swoosh to the downside, and to actually break below this pretty impressive level, reasonably impressive level of support, right around 1325 or so. But just really tried to break down and test the waters below there, and the market really just wasn't able to do so. And there you have a lower high. Higher low, I should say. Scratch that, reverse it, and break above the trend. Once we're above the high of the low, the high of the early session high. Then it was just a retest, a beautiful trade retest right around 1338. And off to the races we go. 1348, this beautiful, almost parabolic move that we've seen intraday on the E-mini S&P 500 futures. It's been a pretty impressive move. I guess I can't stress that enough. But what was an indication behind that? Well, we did have some divergences. It was full on bearish yesterday. As you can see, bearish, 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 bearish. Certainly bearish trend. The price technicals weren't particularly bearish given this bottoming formation, but nevertheless, quintuple bearishness. And so here we are, bullish. We did have the divergence here today. Slightly bearish, bullish, actually slightly bearish there, very slightly bearish there, bullish, and certainly diverging, at least relative to the day prior, yesterday. So it's a pretty impressive move that we've got here so far in the market. As far as an informational based trade, well, you just have to buy the market. So buy anywhere from 1140. We'll call it to, let's see, where do we go? Let's take this low, 1338 to 30. So we'll call 1140 to 1143. Go ahead and buy that. We're at 1145 or 1345.50 right now. So buy 40 to 43, and go ahead and target a blast to at least retest probably this early session high right here around 1351.25. So we'll call it a buy from 40 to 43. Go ahead and target 49. On pretty much the whole position. Actually, you can target 48 if you want to scale out 48 on the first part, and go ahead and target, just hold the rest actually for a target of around 52 or so. 51.25 being the prior day's 51.50. Oh, there was a nice, all you Van Halen fans. Nevertheless, so we're going to go ahead and move that down now on this pretty impressive day. That's the Swing System 5.0 that we were just talking about. I wonder how that's been doing. That's actually part of our look at that, a new high. Had this errant move down. Look at all the beautiful profits from the Swing System 5.0. Took a little bit of a drawdown, 4,000. Anyone who started right here, $4,000, made $22,000. This is after slippage and commissions from March of 09. To essentially in about a year. So $22,000 per contract if you got started here. Now, of course, we, for intents and purposes, always estimate the maximum drawdown. So we have to assume that all of our clients are going to pour into the market, hypothetically speaking, pour into our portfolios at this particular point right here. So if you looked at this chart, we would have to assume that everyone was going to start right here. Now, of course, there's people that are going to start right here, and they're going to make $22,000 in a year per contract. There are people that'll start right here, right here, right here. Some that'll start right there and have a little bit of a drawdown, $2,000 per contract. Not particularly bad was the system, but of course there was this errant move. So we have to assume 18,000 down to 8,000, a $10,000 drawdown. So you have to essentially actually, to maintain the portfolio, you have to have that drawdown plus overnight initial maintenance margins, about $5,000, maybe $4,000 for the margin. So you have to add those two together. You get $10,000 for the maximum drawdown and 14,000 or 4,000 to 14,000. We'll say this will be a $15,000 portfolio, or actually it's just one system. This isn't a portfolio, it's just one system. But the capital to trade this, assuming you're not in a portfolio where you're going to have hedging in a swing model, where you're going to have, you're not always going to be, you may be short while this system is long, so that's essentially going to net out the margin requirements. But nevertheless, so that would be $15,000 to trade this system. But in actuality, you really only need, if you started, let's say you started at the bottom. I mean, your drawdown is going to be next to nothing. So you have 4,000 a margin. Let's say you have 2,000. Looks like the worst drawdown was 2,000. So you could trade this system with $6,000 overall, assuming this errant move right here. If you see all these profits gained right here and all the profits gained since we're almost the last year. There you have another, let's see, 8,000 to 20,000. So another $12,000 in the last year. $22,000 from 09 to 10. So if you take out the drawdown, that was an errant move, and we're back off to breaking out to new highs, which is why this is part of the Q Trader. Actually, we're going to talk about the Q Trader. We need to talk. I'm going to pause the video, because we need to pull up the Q Trader sent out again out of roughly 600 portfolios and advisors. The Q Traders again, like number 4 on a global basis, up a pretty impressive amount last month. And actually, I guess we can go ahead and let's see if we can pause that and pull that up. We'll do this and we'll pause. Okay, we're back. Sorry about that pause or that hesitation. So there's the Q Trader that we were just mentioning. I hope this is yeah, I think we should be good. Okay, so we're back to the Q Trader. Let's go back to our system. So nevertheless, giving up some profits there, but as you can see, if you can take out the errant move, even at $15,000 for this portfolio. This is just a single system. You just put up $15,000. You've made 20 over the last 2 years or so. So you made $20,000 on your $15,000, 150 or so. There you go. There's that drawdown that we mentioned. But of course, what we like to use is actually the average drawdown, because not all of our clients are going to get in to the portfolio right here at the top. Not every single port. Some are going to get in right here. Some are going to be wise and get in right around here, around $14,000. That's what we often mention. Wait for a drawdown, but nevertheless, that's our official stance. But if you wait for a drawdown, you're really just never even going to get it here. So it's best to just go ahead and get in. Look at that, beautiful. But you definitely want to add to exposure, certainly here. And here you might get a little bit concerned. Probably wouldn't add to exposure, but once we got a new high right there, boom, off to the races. So that's a Swing System 5.0. We've already looked at the intraday analysis. There's the EVO. The most important part of the master portfolio. There you see breaking out to new highs. It's really been quiet for the EVO. That's after slippage and commissions. $56,000 in profit after slippage and commissions there, and $30,000. That's for the trade in the EM contract, the S&P 400 mid cap. This is on the Russell 2000. But there you can see, wow, same drawdown, $56,000, almost doubling your money. Or so. Actually, that's over 5 years. I take that back. That's over 2 years. So we're going to go ahead and minimize that, and we're actually looking for the daily chart. There's the MRS, which we've talked about a lot in another beautiful trade. Again, gave up some profits. It's been very choppy late, but bought at $983.60. So now another $2,000 per contract for our MRS EM strategy. There, of course, you see breaking out to new highs. This is why the Q Trader which I believe was one of our first ultimate portfolios. The MSAU was the first, but the Q-Trader was also in that same vein to really just select the systems of very best performers that are all breaking out to new highs. And as you can see, once we get the little green dot, save these little indications right here, it's just off to the races with new highs. So that's kind of what we've tried to do with the Q-Trader. That's how we've been able to put up, we'll go ahead and look at that actually. But there you have just an amazing move on this long position. We started at 87.30, almost the exact entry, by $400 off. This morning was the low, and now we're up at 1,004 again. But particularly the market is bullish. I mean, how can you argue it's bullish? Look at this beautiful bottoming formation with the breakout and retest right around 1340. So definitely want to be buying the market. In fact, these sell-offs that we've seen, particularly news-related, Greece and so on and so forth, have been relatively impressive given that they're just buying opportunities in the market that remains full on out bullish from our perspective. From our perspective, we actually mentioned that last week. To be buying the market. I don't remember exactly. You'd have to reference the video, but certainly be buying the market all the way down from 40 to 30, I believe, would be the call there, and certainly hold it to probably 1,400. So the move that we're going to get from this is pretty impressive. Now, having said that, we are in this cycle. Sell in May, go away. It is May. It's kind of battling this formation. So buy the market if you are at a position, certainly on the long side, given this very bullish formation. Look at this beautiful trend that we drew last week. We can just extend that on up to today. Look at it in concert with our key measure of trend following support resistance coming in at 1327.03. For our intents and purposes, this is what we look at to gauge the market. Had a little dangling participle there, blasted to new high, so definitely fully bullish for the market, although from a directional movement perspective, it's just choppy. Neutrality are the biases there. From a momentum perspective, short-term bearish is actually the case right there, and particularly noticeable divergence we've gotten with an outside bar reversal in price. There we got a divergence, negative to the negative side, and that's why we've gotten some kind of weakness or so. But so that's the bullish or the stance on the market as a whole on the S&P 500 that we have is to be buying it, and as you can see, certainly buy the dips. Nevertheless, we're going to go ahead and minimize that and go back to where we were, which was we'll call it right there. So what was interesting is for the longest time, we can look at right here. For the longest time, oh, it's actually not right here. The master has been sitting on a 78% gain. It was up 68% or so for a couple of weeks, and picked another beautiful winners up 78%. So it was really, while our other portfolios had kind of were chopping around a little bit, up 40, 30, 50% or so, it was just sitting atop the portfolios. Well, it just got overtaken actually by the Delta DTS and the aforementioned MSAU DT. Very interesting overtake. The master portfolio for the number 1 and 2 spots in real-time tracking over the last 72 days with a staggering 83.8% and 82% return, respectively. And there you see, over the last 72 days or so, 83% return for the Delta DTS. So that's 70 days. It's about 3.5 months, 4 months or so. Those are trading days, of course. So 4 months, 83%, certainly on an annualized basis. You're looking at almost 250% return, actually a little over 250% return. So very, on an annualized basis, very impressive. The Q-Trader is actually, we track it right there, 52.5% has been the gain over the last 72 days as we've been in this this profit-making mode. But there's the master still sitting on the 78.4% gain. But what's interesting is, and we've been recommending the Delta TTS to clients recently, and prospective clients as well, as the portfolio that's really on fire. And of course, it's made another, if we go back and look at this right here, it's made another, let's see, yesterday on Wednesday, today's the 12th day of May, Wednesday it made $430 yesterday. So any clients that are prospective prospects that have been waiting for an opportunity again and have certainly missed the boat, at least on this run, certainly overall haven't missed the boat, and it's never too late to get involved. But as you can see, just in the last 2 days, we've mentioned many times, 10 to 20% of our profits are made on 80-90% of our profits are made on 10 to 20%, scratch that, reverse it, on 10 to 20% of the trading days. And there you have a perfect example of $2,400 yesterday, and the day prior $2,000, almost $5,000. What's interesting is the new Delta DTS, which has been retooled a little bit, and we need to get back on the website that was actually closed in its prior iteration. I think we may be over our time limit. Oh, I hope we're not. So if we are, we'll just end it to that video. That was 15 minutes or so. But as you can see, we're going to go ahead and try and post it. If not, we'll just do another video maybe, perhaps. But the Q Trader we need to talk about. Delta DTS is the portfolio to beat. MSA UDT is actually up there as well. Over the recent days, as you can see, they have been gangbusters. And the Q Trader, got this email the other day. Our portfolio, the Q Trader, up 32% in April. Max drawdown of 10%, up 57% over the last quarter against max drawdown of 38%, up 243% lifetime over, I guess, a couple of years or so, with an 86% max drawdown. Now, granted, there's a little bit more of a max drawdown than those, but look at the percentage return. Even if you have that to 43%, doubled your capital, you're still looking at 120+% return, which certainly bests and is comparable to all three of these top performers that they've rated based on just the last quarter. 109% for the NY Gator. These, of course, are energies and stuff like that, but this is a diversified portfolio. These may just be single systems. Any single system can really have amazing returns, but this is a portfolio, a basket of about 7, I believe, no, that's MSAU, maybe 6 systems. So now that we're out of time, if you have any questions, go to the website, chat with the support team. If you have any questions about your own portfolio or any futures contracts you may be holding, or just any questions for our analysts at all, just click on Ask an Analyst. You can go to the website right there. And hope you enjoyed the video. If you have any questions, shoot us an email to MiniAnalyst.com. And again, hope this video didn't go too long, and we'll see you next time.